Hello and welcome. I'm Christine Zhou reporting for ATF TV from London. Today we are pleased to welcome back Isaac Poole to ATF TV. Isaac joins us from Hong Kong and is the CIO at Oreana Portfolio Advisory Service. He joins ATF TV today to talk about the environmental, social, and corporate governance sector, or ESG as it is better known. Isaac, welcome back to ATF TV.
Hi.
And to China, Isaac, it's the world's biggest emitter of carbon dioxide and has moved towards sustainable development, with an increasing number of companies signing up to the United Nations Principles of Responsible Investing. What has brought about this change, and in what way will it impact the economy?
Yeah, there has been a really rapid increase in the number of Chinese investors and the number of Chinese companies signing up to these various environmental groups and pacts like the UNPRI. And I think that has been a pretty significant turnaround from what we saw in decades past, where in China it was really growth at all costs, and there was not a great deal of focus on the environment. And we're seeing now a real drive from the government and from authorities to refocus on the environment, and that came through really clearly and very strongly in the most recent 5-year plan. And so, in terms of the economy and what is different, it means that we're not going to see a growth at all costs sort of view in China anymore. This is growth, but it needs to be growth with an environmental edge.
Isaac, China's aims to be carbon neutral by 2060, with carbon emissions set to peak by 2030. Which sectors are seeing a positive impact of this, and how are the sectors that have high emissions adjusting to these deadlines?
Yeah, I think where we're seeing is this focus on the environment alongside growth in the most recent 5-year plan means that China needs to rely very heavily on research and development. It needs to rely very heavily on technology. It needs to rely really heavily on improving productivity. If it's going to be able to achieve growth, we're going to see a shift away from heavy industry and a shift away from fossil fuels and coal energy over a longer term period. That focus on sectors that are positive for the environment is coming through very loud and clear. What is less clear is a desire to reduce funding or reduce opportunities for the heavier polluters and heavy industry. That's not going to happen, we think, in the near term, but you will absolutely start to see that shift in the medium term and the longer term. And after all, ESG and sustainable investing is a long-term focus. The Chinese government is prepared to play that long-term game and really start to tilt away from the more pollutive industries and into the more renewable sectors.
Isaac, experts says that in China, ESG is seen as a risk rather than an opportunity, and ESG valuation is for risk management purposes rather than alpha generation. Why is there this difference, and how are companies adapting to this?
What I think we'll see over coming months and what we'll see over coming years is an increasing demand from investors on the other side, a demand from investors including domestic investors and foreign capital flowing into China for very clear sustainability frameworks from corporates that improve corporate efficiency, that improve the management frameworks, and contribute to long-term shareholder value and long-term shareholder returns. And that is really how ESG processes and sustainable investing can contribute to alpha over the long term.
Thank you so much, Isaac.
Thank you very much.
And thank you everyone for watching. For more stories like this, please log on to asiatimesfinancial.com for the best Asia news on markets, economies, and more. I'm Christine Zhou reporting for ATF TV.